Okay, hey everyone, it's Michael Valtos here from Orderflows.com, and this is the Orderflows market analysis for Monday, May 15, 2017. I apologize if I sound, my voice sounds much deeper today. I'm still fighting this very bad cold that I've had for quite a while. Every time it goes away, it comes back. But S&Ps rose today. We closed higher, and we're approaching, on the future side at least, we're approaching basically our all-time high, which was made just after that French election. And let me just get the daily chart up here for you really quick, if I can find it. There we go. After the French elections, we got up here to what was that, like 03 3/4. Today the futures we got up to I believe it was 2 1/4, so very, very close. In the evening session we're trading a little bit lower. That's fine. We'll see if we can get some follow through later today. Now, the housing numbers, if you've been following the numbers, again, I don't claim to be an economist, so when I talk about numbers, it's just my own personal thoughts. I'm definitely not a classical trained economist in that sense, and I don't claim to be, and but I do look at the numbers because again, I'm curious. But housing has been emerging as basically the economy's best surprise this year, I think, and it's been showing strength all year long. And this most recent numbers have been coming out, is showing strength in first-time buyers, which I think is very important because that's been scarce. I mean, it's one thing, people buying second homes or things like that, investment homes, but really what you want to have is first-time buyers be coming into the markets. And excuse me. So that said, let's get jumping into this analysis for today. First, the disclaimer: this presentation is for educational and informational purposes only. Should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and it's not for every investor. An investor could potentially lose all or more than the initial capital. Risk capital is money that can be lost without risking one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, your trading is going to be different than my trading. I teach people how to trade, but I don't expect them to be, copies of me trading. Every trader is different, and there's going to be things that resonate with you that I talk about, and things that make no sense that you just don't grasp, where you think, Mike, he's crazy, he's a crazy fool, he's get a tinfoil hat for him. But hopefully in my discussions, in these videos that I put out, you'll find something that you'll say, yeah, that makes perfect sense. Now I can understand the markets better, and that's really why I do it. So for all you haters out there, just keep on hating. The tools used in this presentation are the Orderflows Trader, the Delta Scalper, and I do talk about other indicators here and there, once in a while, but the main ones I'm using in this presentation is obviously the Orderflows Trader, which is the footprint chart, and my proprietary indicator, the Delta Scalper. So talking about the Delta Scalper, let's take a look. Now there were some interesting things. This is Japanese yen, and this is just the night session. You get right on the high in the night session, 6:55 Chicago time. You do get a sell, but again, I don't advocate trading during the Asian session. If you don't have to, if that's the only time you got to, then no choice. I do think it's a little bit difficult, and that comes from experience. I've lived in Asia, and I've worked at the trading time. I've been there from the reopen for 8 years. I literally traded the reopen of I'll say Globex. People don't refer to it as Globex anymore, but basically the reopen of Globex until mid-European session. I did that for 8 years, so I know when the markets are lackluster, when there's not a lot of shit going on, and when the markets are active. And again, if you had your choice of trading, during the trading day, what's the best time to trade? Obviously, if you trade in U.S. markets, during the U.S. hours. Second would be the early morning, the European hours, and lastly would be Asian hours, especially, sometimes it's like watching paint dry, honestly. There's no other way to put it. So, but anyway, speaking of the Asian session, the European session, give me a sec. Okay, so this was the Delta Scalper this morning in Europe. European session, 2 in the morning. You had a buy here, but it's a red candle, so you really shouldn't be looking to take it. Again, why are you looking to buy when the price action of the bar is down? You shouldn't be. But then at the low of the day, 88.03 and a half, you get the delta scalper giving another buy. Here is the delta surge giving a sell. Okay, again, I've talked at length about taking things in context of the market. After you have a big sell-off and then you get the delta surge given a sell, is that the best place to take it? No. What would you rather be doing? Buying off a low or selling into a low? Yes, you can go lower, but if you just had a big move from higher level down into new lows to get a sell signal, it's probably not going to be very effective. What you should be looking for is buying signals. I say buying signals because people are going to think, oh, use the red light, green light system. No, it's not. You're looking for signs in the market, in the order flow, that the market is bottoming out and is possibly getting ready for a turn. And you get it down here with the delta scalper giving a nice buy. You got some nice imbalances off this low. Start rallying. You go from 88.08. You get all the way up to 28. You start to go sideways here. So this was a nice move here. Yeah, sorry, I gotta pause. If this recording sounds sketchy, it's because I keep coughing. Okay, so then a little bit later, now you get the delta surge given a buy. Okay, so you're going sideways, right? And this is why I came up with this delta surge, because in a market that's going sideways, like it is here, you can't deny it's going sideways. Poke lower, you're basically trading between 29 and 20. Then you start getting back up towards the high of this range, and you get the delta surge kickoff. Those are the types of trades you should be looking to take. Not, after you sell off like here, right? You literally come from your high straight down into your lows, low, 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 lower, and then you get the delta surge right before the bottom. That's not where you want to be taking it. What you want to be taking it is a market that's going sideways. Ideally, this is, when I developed it, it was because of this. It was because of markets going sideways. You can't make heads or tails of what's going on. Is buying picking up or selling picking up? But you can see it in the delta increasing here, and you get your signal right there. And you go from basically 88.30 all the way up to new highs 88.40. You get a ratio right up here at the high of the day. You start selling off from the high of the day down into this area where you get this delta surge. But again, it's on a red bar. You don't want to be taking it if you don't get the confirmation in the bar. Sort of comes into this bottom, starts turning around, get the delta surge buy here. Wasn't very great. It just went sideways on you. Buy here, sell here. This one you really wouldn't be interested in taking. You got the delta surge there going into the low. Yeah, I don't know. I'm not a big fan of them. I just don't find them very effective going into the lows or highs, in the sense that where we had just moved from a much higher area. I'd rather be taking them after a period of absorption, a period of congestion. Okay, let's see what else we got here. Let's talk about the euro currency here. Again, euro currency, we're in the evening session right now. Very tight range. It's not advisable to be trading that time. Let's just go back a bit here. Okay, so you did have this buying imbalance here. Now you get to this bar here, point of control right at the top. I do find that bearish, and it just goes sideways on you over the next 3 bars before coming back up and taking out the highs. Is there any sign in here? Well, it's very, very thin volume. That's one thing, and this bar's got 278 volume, which is nothing. Normally these bars got 800 and 1,000 here, 1,800. 1,500, but I'd be getting worried. Say I got short off this bar, I'd be getting worried down here when you come into this bottom here where you got some decent volume. And when I say decent volume, use your eyes. Look at what's trading. Okay, here you got 144, 151, 250, 118, 103. There is some supportive buying in there. There's no way, you can't deny that. Especially when previously, do you see any volume like that? Here you got 195. That's it. 139, 160. That's it. There's not much other volume in here that stands out. So there's supportive volume coming in. So if you've been short and you're seeing buying come down here, you get out. I'm not saying get long, but at least get out. Okay, so then we come up here, we get the delta scalper giving a sell, but it's on a green bar. You really shouldn't be interested in taking those. Going sideways here. Another green bar with the delta scalper, not really interested. Here was a ratio, at this high of the day. There wasn't, at these highs, there's no ratios here. Here you got a failed divergence. Here you got a failed divergence. Here you got a failed divergence. So, when I start seeing failed divergences, I do think the market is going to start to move up if it's, failed divergences on the way up. And we do. Get another one here. Then here, this is a delta scalper you should be looking to take. You should be looking to take this, Here the bar confirms it. We close lower. And, we do trace back up to this high. We test the high. Okay. But then, we make a move down finally. Here just sort of going sideways. Nothing spectacular happening in here. That brings us to where we are right now. The next one I'll talk about is beans. Honestly, I haven't looked at the beans in a couple since this morning. So, the first sign, 8:30 really is the time you should be looking at it. And 8:37, you get this bar here, point of control right at the top, you get a zero print there. Again, this is around that time of the reopening, the futures open at 8:30. And, you got to give it some time to work out. And oftentimes, within the first 5 minutes, towards the end of the first 5 minutes, this is 7 minutes past, you get this. And if you've been watching my videos for the last week, you'll see this happen quite often. Is it actionable? Yes, it is. You do get a little bit of a move lower, but nothing much you do. So you get failed divergence, failed divergence, failed divergence, failed divergence. So if again, if you're just selling divergences by themselves, this one I think is the only one that's actionable. These two, no. Even though it doesn't come back up. But again, be careful selling any blind. If for people say, yeah, you could have sold this and made something. Yeah, you could have sold that and made something. Yeah, you could have sold this and made something. What are you going to make? 2 or 3 ticks? Is that what you want? I mean, if that's what you want, then yeah, sure, go for it. But I'd rather get, in the soybeans, I'd rather get cents rather than, quarter. What do you call it? Quarter ticks. Moves in 1 cent, but there's 4. Goes 970, 971 and a quarter, 971 half. I'd rather get full cents rather than the ticks. So. Again, you get this is the stacked imbalance. Now, can you trade that? Yeah, you can. I'd much rather get the stacked imbalances a little bit closer to the highs or, swing highs. Not after, in this case, you can make the argument that you're sort of breaking down and going lower. Okay, you can do that. Is it a big move down? No, not really. It sort of goes nowhere for the first 5 bars, which, at this point, if you're short this imbalance at here, you're thinking, it's still in your favor. Maybe you want to hold it. I don't know. Me, at this point, by the 6th bar, if it's still just sort of hanging around there, I'd probably bail out, honestly. Then we just go sideways off this stacked imbalance. So nothing special in the soybeans. Again, why am I showing you? People are saying, scratching their head, Mike, why are you showing me this? And nothing happened. Well, I do want you to see, there are times when nothing happens in the market because people think that, order flow is going to pick every single turning point in the market. No, it's not. It's going to find those areas where, where there's something happening that you can trade off of. And, sometimes there's just nothing happening in the markets. Different markets got different reactions. This one I thought was interesting this morning. I remember watching this and I was looking at it. We come into this low down here at 7:30. You got a ratio. You got the price rejector giving a buy. You don't have a divergence. You got a negative delta. You do next bar. You get the delta scalper giving a buy, and you just don't go anywhere. You just start coming down. So this is about picking up what's not happening. Everyone talks about where to get out of trade management. Is part of being a good trader is managing your trade and recognizing when it's not working out. So if you're getting long off this, and the next bar you got a bullish sign, but then this bar is down, it doesn't go any higher. This bar is down. You get out. You get out here at break even or even lose a tick. There's nothing wrong with losing a tick. Would you rather lose the tick or let it come down here and stop you out? You should take the tick rather than the full stop out. Then down here, you get another ratio with a not another one. This is a ratio with a divergence. Here is just a divergence. Again, that's nothing. Here is a divergence with a ratio. And do you get a move? Yeah, a little bit. Nothing to write home about. Bonds, interest rates, well, 5 years at least, we're pretty quiet today. And so let's just move into the bonds here then, if I can find them. Where'd you go, bond chart? Excuse me. Oh, I'm sorry. So, bonds are a little bit different than the 5 years. Different but similar. And down here, you don't have a ratio, you don't have a divergence. You didn't have a divergence on the 5 years, but you do get the U-turn, given a buy there, just as you had in the 5 years. Putting control towards the bottom. Okay, I'm not necessarily convinced. And here you get the delta scalper, given a buy. Yeah, I'd probably be more interested in that. And what does it do? It just comes right back down on you. So you got to recognize it's not working out. Here, it's almost a ratio. Almost. It's 0.73. You get the U-turn, given a buy. You get the ratio afterwards. Honestly, I thought this one, is interesting. I'm not going to say, yeah, I would take it, because then people will say, oh, Mike is saying take it. It doesn't have the ratio that he likes, though. He's cherry picking. But whatever. Again, the best computer is the one on your head. One of the problems that traders, I think, struggle with is trying to be exact. Exactness kills. And, trading doesn't work that way. Everybody wants to be exact on where they enter, exact on where they exit. And, that's not to say that you can't be exact, but sometimes, you're reading the market, and it keeps changing, right? It's telling you different things. And, the only way to be perfectly exact is if you have your system fully programmed, that, you're not even involved in the decision making. Basically, you're there just to make sure the light's on and the system is running as properly and doesn't blow up on you. But really, what you're looking to do is, make the best, I'll say guess, but make the best trade based on the information you have at you. And if it changes, it changes. People, sometimes they think, well, I gotta either let the trade stop me out or go to the full profit. No, if it changes, you can see here, point of control all lined up right at the same level, more or less. 3 at the same level, 1 here. Okay. You're thinking at this point, if you're getting long off this and you start coming in here sideways, you get out. Let's say, well, I'm waiting, we're just consolidating. I'm going to wait for that move. You wait for the move. In this case, it came lower and would have stopped you out. What can you do? Then down here, you get the divergence. Don't get the ratio. Get the price rejector, though. And then you get the ratio afterwards. So you got the divergence with the ratio afterwards. And you get the bar here. 1 bar up, basically, going into the close. Okay, Euro currency. Did I talk about Euro currency already? I did. I think I did. What I want is crude then. Sorry, my brain isn't actually acting proper. I'm on a lot of cough medicine and Vicks and all that sort of stuff. You could just hear my voice. It's a bit of a struggle talking. Although I can't say I'm sick, because my wife will say, oh, you're so sickly. But I'm not feeling well. But anyway, I wanted to talk about crude going back to the early morning. Where was it? So here you got a ratio and divergence. You do come off a little bit. It's 2 in the morning. It's a little bit early. Okay, fair enough. Maybe you're not interested in taking it. But, I wanted to talk about this. This was quite interesting. Again, people that know me I'm a big fan of Delta. And you see it come up into these highs. Delta's getting weaker. 332.153 at the high, negative, strong negative. Then it turns back, neutral, 7. Starts getting stronger again. And then you make another move up. And, this is the beauty of it. You could just sort of track it. It's not always as beautiful as this. We're sort of coming up into the high, getting weak, okay? And then you see it, the weakness dying out and the buying come back in again and going back up. I mean, you could just sort of track it. If you were to draw a line, it would look like that. It would look like a snake. And, same thing up here. At this high. Look how we're coming up into the high, 582, 187, 146. Make the turn up here, 146. Negative here afterwards, 187, 500. Would you be looking, at this point, you should be looking to get short, right? You're coming up here. Buying is definitely weakening up, 600, 500, 500, 180, 140, red bar. The next bar, negative delta. I'd be interested to sell. You could sell up here, at 49.32, that area. That'd be a great sell. And what does it do? It just goes down, down, down. At what point? Down, from 32, from the 30s all the way down to, below 10. So it's quick. Say a quick, but that's a 10-cent, 20-cent move in 10 minutes. This is Delta Scalper gave a sell, didn't work out. Then again, you do have this stacked buying imbalance on the high. I think that's a stop-induced one. Failed divergence, two of them, boom, boom. You get to this high here. Again, like I just said, watch these deltas. 571, 452, 164, then boom, strong negative, and then the selling just falls over. Strong selling, 400, 400, 700. Again, you could be getting short, even if you're late and getting short at 49.50, it's a move down into the 20s. It's not all the time you get, patterns like that in the delta. A lot of times it's choppy, it's just like this, big, small, 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 big, whatever. Not much going on. But, watch these things at highs of days, lows of days, and, make your decisions off that. So here it gets a little interesting. This is the Delta Scalper. This sell, I don't think you should be taking this sell. You can. You get a nice little 10-cent move there. Buy here. It just sort of goes sideways on you. Going down into the 2 o'clock area, before we end up the day and get into the night session. Let's talk about this S&Ps. Again, S&Ps, we're getting up here near our contract highs on the June contract. Cash, I believe, cash made a new high. But what I thought was interesting was this move going into the highs up here. Okay, the high I'm interested in is this high, 2400, which is a high that we have been testing a few times last week. And look, as you're getting up there, very strong buying coming. You even got the imbalances, boom, and you stop right there. Stop. You got failed imbalance, failed divergence. But you're coming up here, imbalance. Very good volume coming up here, 6,000, 3,000, 2,000, 2,600. So you got two failed divergences. You got another new high here. And then you get another failed divergence. At this point, it's like, I do think we're going to go highs, but you got to be careful. This is an area, right? It's new territory. I'll say, even though we did hit it a couple weeks ago, but essentially it's new territory. We hit it, we sold off a couple weeks ago. Or last week. Feels like 2 weeks ago. But so I do know there's going to be resistance up here. So I'd be very careful getting short, or because it might come off and test it again. Now here you got the high up here at 2402 and a quarter. You got a divergence, no ratio. Here you got the Delta Scalper giving a sell. Then you get down here, you got a buy, and it just sort of goes sideways a little bit below it, the level. Come back up. It's in a tight range. Honestly, you're looking at 10 o'clock until here 1 o'clock, and basically you're trading between 98 and a half and 02. So it's about a 4-point range. Here you get Delta Scalper giving another buy. It does pop up a little bit. Going into the cash close, you get a nice stacked imbalance. But where are we right now? It's still trading around 23.99 and a half. But these, how to say it? you know, even though you look at the range, right, and you see, oh, the low is here at 88. Really, you should be looking at the most recent range. You know, go back to the European Open. If you go back to the European Open, basically, what's your low? 91. You know, 91 and a quarter. Or you did dip down, but for the cash session, you know, very tight range, very tight range. So you're not going to have big moves on days where you have tight ranges. Anyway, my cough keeps coming back. I'll finish this presentation. I think it's just a bit hard for me to talk. But before I do, you know, there's just one other thing I wanted to point out. This is the transition indicator. You know, this was a nice day today on the transition. This is the mini Dow 100 range chart. Again, going back to the cash open, I don't advocate trading the Dow, you know, at 1 in the morning, 2 in the morning. You trade it when the Dow the Dow index is open. So where you're going to get real moves. Anyway, 8:30 here. Get the sell here. Again, I don't advocate taking that because it didn't go any lower after the signal bar. Here, this is what I like. You get your signal bar here, and you can see we start trading higher. That's what you want. So, you know, even if you took this, you got stopped out, okay. That's a nice buy. This is another buy, but you probably still be long. Get a sell here, get a buy there. Sell here, buy. Excuse me. This one you probably wouldn't have taken. This one you probably would have, but it just sort of went pear-shaped on you and went nowhere if you took it. You know, maybe it just stopped you out. Maybe you'd just, you know, take a break even or take a loss on it. I don't know, but there was some very nice trades in here you could have had. You know, it's almost picking I'll say it's picking every turning point, but you know, it's picking these areas where there's nice turns in the market. You know, that's what you want as a trader. Again, I don't want you taking this and using it as a red light, green light system. Read what's happening in the market. Let the market take you in. You know, if you're getting a buy signal or a sell signal, like here, you're getting a sell signal. Let's just blow this up real quick. Okay, this is your signal bar right here, right? Next bar opens up, trades back up. Okay, you know, what you should really be doing is let it lead you in. You know, the low of this bar, you know, you should be getting in here. You know, put a stop in for your entry. People don't understand that. They think stops are only used to get out. A lot of people use stops to get into the market. And, you know, that's where it comes in. You know, okay, if it trades here, 20,902, I'm in, or 903, I'm in. It doesn't. You know, the market's not taking you in. It's just reversing on you. So again, you know, it's up to you whether you want to take those or not. I let the market take me in. I like to let it confirm to me that, you know, the move is underway. But you know, that's me. Okay, so anyway, guys, you know, thanks for watching this, and I've got a webinar coming up this Thursday. If you haven't subscribed to it on one of my previous videos, there's a link there. You can subscribe. I'll throw the link in this description as well. I'd appreciate it if you could sign up and attend the webinar. So thanks, everyone. Bye-bye.